In this video, I'm going to do three things for you. Number one, explain what a 1031 exchange is. Number two, how Biden's tax proposal can affect 1031 exchanges and exactly what could potentially happen if Biden's proposal passes. What's up, W2 Capitalists? Jay here. So there has been a lot of talk recently about how Biden's tax proposal will affect the real estate market. All right, guys, if you're already familiar with what a 1031 exchange is, then skip to the next portion of this video. There's a timestamp shortcut in the description below because I'm going to spend the next few minutes explaining what a 1031 exchange is for those folks who may not know what it is, and I'm going to do that right now. All right, y'all, a 1031 exchange is a tax law. It is not a loophole. It's a law. When I was doing this research on this, I saw so many different media outlets calling it a loophole. It's not a loophole. It is a law. It was passed as part of the Internal Revenue Code in 1921. That's right. It's almost 100 years old. So stop calling it a loophole. It's not a loophole. It's the law. What this law allows you to do is defer, and I'm really going to emphasize that word defer because several of the top ranked videos on here on YouTube claim that a 1031 exchange is a tax-free event. Guys, this is simply not true. A 1031 exchange allows you to defer capital gains on the profits of any real estate transaction as long as you take those profits and you turn around and invest those profits into another, or in the verbiage, right, in the technical verbiage, like-minded asset. Sounds like the true definition of capitalism, which we know Biden hates, but let me explain this a little bit further, right? Let's say you have a rental property. It can be a residential or commercial, it doesn't really matter, right? But you have this investment property that you purchased for $300,000. You've held it for 10 years and it is now appreciated to be worth $600,000. You sell it and you use that $300,000 gain to immediately invest in a like-minded property. And your taxes on that $300,000 are deferred until a later date, which means they're just pushed out. Now, there are strategies that one can employ to eventually put those gains into an estate and pass that estate on to their heirs without paying a huge tax burden. But that's above my pay grade. I'd love to bring in my certified financial planner, Mark Willis, to talk more about this, and estate planning is actually on my radar to talk to him about it personally. If that's something that interests you, let me know in the comments below or by simply hitting the like button or actually do both. I've done a 1031 exchange once before. It was our very first rental property. It was a single family, it was a 1-bedroom, 1-bath. We purchased for $23,000, right? 3 years later, we sold that 1-bedroom, 1-bath for $50,000, right? So I took that entire amount and I 1031 exchanged it into a fourplex. And here's why. Our very first rental property grossed $600 a month. And when we 1031 exchanged that money into a fourplex, that fourplex now generates $2,300 a month. And that's why this is such a hot topic, right? Under Biden's tax proposal, we as investors are not incentivized to keep those capitalistic motions going, right? It doesn't want us to do that. Think of if you're playing Monopoly, right? And you finally get all 4 of those houses on your property there, and you want to upgrade to a hotel. Under Biden's proposed tax law, you would have to pay 39.6% tax to be able to take your 4 houses in Monopoly and upgrade to a hotel. First off, Biden's proposed tax plan does not completely eliminate the 1031 exchange. As the proposed plan is written, it will eliminate only 1031 exchanges where profits are $500,000 or greater. I personally don't think this thing is going to pass because of all the stuff that's in it, like 4 years of free college for everyone, right? But I have to give Biden credit where credit's due. He knows that 1031 exchange is something very popular amongst Republicans, especially with Trump. And I can see where he might have inserted this to grab some attention and use it as a bargaining chip later to get his proposed tax law passed. So here's what's at stake. Let's say this proposed plan does pass, right? This means that if you invested your hard-earned money in the right kind of asset because you did your homework or you just got lucky. Personally, I would prefer to be lucky than good. But let's just say that you have done things right and you're going to see a $500,000 profit on an investment property you've owned for any amount of time. If Biden's proposed tax plan passes, then you end up having no choice but paying a 39.6% capital gains tax on that $500,000. Now, that's nearly $200,000. Would you rather pay that $200,000 tax bill now or defer it down the road? Most of us want to defer our taxes, but one thing we can count on is taxes are only going one way, and it is not down. Something else I believe that's at stake if this bill passes, and I don't believe I hear a lot of people talking about this, is there are institutional buyers out there and they are buying multifamilies, right? And they're starting to buy single families. I believe if this bill passes, their focus from commercial multifamily is going to go to single family and small multifamily assets, right? Jay, what do you mean they're going to shift? They're already here, right? I completely agree. You guys are competing with them every day. I hear folks in the mastermind running into these institutional buyers all the time. What I'm saying here is that there will be gas poured on this fire if the Biden's tax plan passes. What this means is it's going to yield an even more pressure on the ridiculous low supply, high demand single family market. You talk about prices still going to skyrocket, right? And you may be thinking, no way the guys who are buying commercial multifamily won't do this. They won't abandon multifamily. But for 39.6% of my profits, I am happy to abandon it, right? But remember, this is a tax deferment, right? With the idea you can put these properties into your estate and pass it on to your heirs long time from now, right? And this is not a tax-free wealth building scheme, right? It's tax deferment. It's not tax-free. It's a big difference here. So here's where I stand. I am completely in support of getting rid of the 1031 exchange loophole. It's not a loophole as long as this means we're getting rid of the IRS altogether. I think that would be incredible, right? But the truth of the matter is, for most of us watching this, there is very little we can do about it to ensure Biden's proposed tax plan doesn't pass, right? Except stop watching the news, stop buying into all the hype, and tap the like button. I'm just kidding. Here's what you can do about it, right? You can continue to look for investment properties that fit your criteria, and you get ready to shift when the market shifts. I am asked all the time how I balance being an entrepreneur, an investor, a family man. Before, I had one more notch on that belt. It was being a W-2 employee. And it's all because I adopted the things that I go into in this 14-day challenge that I want to invite you to take on, right? And you can sign up for it free at producemoretime.com.